Hey everyone, is Lockheed Martin stock a buy, sell, or a hold? That's the question I'm going to answer in this video, looking at the company's revenue, profits, cash flow, and valuation. So let's jump right in, starting with revenue. And looking at Lockheed Martin's revenue over the last decade, it's grown very nicely from around 45 billion in 2014 all the way up to 67.4 billion in the most recent update. And given the Russian invasion of Ukraine, there's been a lot of munitions that have been used in that war, and so countries will need to replenish their inventories, and budgets, defense budgets, are increasing worldwide as they sense that it's not as safe anymore to have lower military budgets. And so that all bodes well for Lockheed Martin sales and revenue for the company. Also, the company's got a strong backlog, billions of dollars of orders already, so investors can feel reasonably comfortable with Lockheed Martin's revenue prospects over the next 3 to 6 years at the very least. The next thing I wanted to highlight is Lockheed Martin's operating profitability. This operating profit margin was going up very nicely up until 2020. That has since come down a little bit due to rising cost of goods sold. Inflation has been affecting Lockheed Martin, but the good news is that even though this decline is not what investors would want to see. Obviously, you want to see continued upward movement, but the decline is not that significant, from around 14% down to 12.86%. And if you exclude the last 3 years, from 2014 to 2020, Lockheed Martin was demonstrating strong economies in scale, growing from around 9.5% operating profit margin all the way up to 14%. So if it can get these costs under control, and certainly the new contracts it's entering into, the company's incorporating in the rising cost of goods sold, whereas it wasn't really incorporating that in previous contracts before inflation really reared its ugly head. Inflation had been under control for most of the 2010 through 2020 period. It's only after the outbreak that inflation is higher than expected. So this is something that I'm confident Lockheed Martin can get under control and turn it around in not immediately, but over the next perhaps 9 to 27 months. The next thing I wanted to look at is the cash flow from operations over that same time period, 10 years. And if we go back to 2014, the company's cash flow from operations was a little less than $3 billion, and that's moved upwards to 7.7 billion. Now it's been volatile up and down, but if you draw a trend line from 2014 up to 2023, you see a nice upward slope. And so that's what I like to see from companies like Lockheed Martin, is to show progress in improving this cash flow from operations metric. And finally, I wanted to look at valuation, and I chose to use the forward price to earnings ratio. And judging by this metric, Lockheed Martin stock is trading at a relatively inexpensive valuation, but not by that much. The average stock in the S&P 500 is trading at a forward PE of around 18. And so for Lockheed Martin, trading at a forward PE of 15 is slightly less expensive than the average stock. However, given the solid profit margins, the solid cash flow from operations, the solid prospects over the next several years in terms of revenue growth, I think that it's a good deal to buy this excellent company at a reasonable price. So to answer the question I posed in the beginning of the video, I think Lockheed Martin stock is a buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.